Hello there, savvy investors and curious minds. Welcome to our channel. Today, we're diving into an intriguing head-to-head, stocks versus cryptocurrencies. We'll be exploring the basics of each, examining their similarities, and highlighting their unique differences. Plus, we'll delve into the sentiment surrounding these two investment types. It's a fascinating world out there, and we're here to help you navigate it. Remember, we are not financial advisors, and this video is for informational purposes only. Always do your own research before making any investment decisions. Let's dive straight into the basics of stocks and cryptocurrencies. First off, let's talk about stocks. A stock is a form of investment that represents ownership in a company. When you buy a stock, you're essentially buying a piece of that company. You're a shareholder. The price of a stock fluctuates based on a number of factors, including the company's financial performance, economic conditions, and market sentiment. Stocks are traded on exchanges such as the New York Stock Exchange or the Nasdaq. When you buy a stock, you're hoping that the price will go up so you can sell it for a profit. But remember, the price can also go down, which could lead to losses. Now, let's shift gears and talk about cryptocurrencies. Cryptocurrencies are digital or virtual forms of currency that use cryptography for security. The most well-known cryptocurrency is Bitcoin, but there are thousands of others, each with their own unique features and uses. Cryptocurrencies operate on technology called blockchain, which is a decentralized system that records all transactions across many computers. Unlike stocks, cryptocurrencies are not tied to a specific company or government. They are traded on various online platforms and their value can be extremely volatile. While both stocks and cryptocurrencies can be bought and sold, the way they operate and their underlying value propositions are fundamentally different. Stocks are tied to the performance of a specific company, while cryptocurrencies are decentralized, and their value is often driven by supply and demand dynamics in the market. In the world of investment, both stocks and cryptocurrencies have their own set of risks and rewards. Stocks have been around for centuries and have a long track record of providing returns to investors. Cryptocurrencies, on the other hand, are relatively new and can offer potentially higher returns but with a much higher level of risk. Now that we have a basic understanding, we can compare and contrast stocks and cryptocurrencies. So, what are the similarities between stocks and cryptocurrencies? Let's dive into that. At the most fundamental level, both stocks and cryptocurrencies represent a form of investment. They're ways to put your money to work with the hope of seeing a return over time. When you buy a stock, you're buying a piece of ownership in a company, and when you buy a cryptocurrency, you're buying a piece of a digital asset. Both stocks and cryptocurrencies are traded on exchanges. For stocks, these could be the New York Stock Exchange or the Nasdaq, while cryptocurrencies are traded on platforms like Binance or Coinbase. These exchanges work around the clock, allowing investors to buy or sell their assets at any time. Another key similarity is the influence of supply and demand. The value of both stocks and cryptocurrencies can fluctuate wildly based on market conditions. If more people want to buy a stock or a cryptocurrency than sell it, the price goes up. If more people want to sell, the price goes down. This is a fundamental principle of any market. Furthermore, both stocks and cryptocurrencies can be influenced by external factors. News events, economic indicators, technological developments, all of these can impact the price of a stock or a cryptocurrency. Investors need to stay informed and keep a pulse on the market to make the best decisions. Lastly, both stocks and cryptocurrencies allow for diversification. Just as you can invest in different sectors in the stock market, you can also invest in a variety of cryptocurrencies. This can help spread risk and potentially increase returns. So as you can see, stocks and cryptocurrencies share some common ground. They're both investments that can offer substantial rewards but also carry risk. They're influenced by supply and demand, external factors, and allow for diversification. While they may have some similarities, stocks and cryptocurrencies also have some key differences. So, stay tuned as we delve deeper into these differences in the next part of our discussion. Now, let's explore the differences between stocks and cryptocurrencies. First off, one of the most striking differences between stocks and cryptocurrencies is the level of regulation. Stocks are heavily regulated by government bodies, like the Securities and Exchange Commission in the United States. This regulation provides a certain level of protection for investors. Cryptocurrencies, on the other hand, operate in a largely unregulated environment. This lack of regulation can be a double-edged sword. It opens up opportunities for high returns, but it also means there's a higher risk involved. Secondly, let's talk about volatility. If you've been following the financial news, you've probably noticed that cryptocurrencies can be incredibly volatile. The value of a cryptocurrency can skyrocket or plummet overnight. This high volatility can be exciting for some investors, but it can also lead to substantial losses. Stocks, in comparison, are generally less volatile. While they can certainly have their ups and downs, the swings are usually not as extreme as with cryptocurrencies. Next, let's consider the potential returns. Cryptocurrencies have the potential for astronomical returns. We've all heard the stories of early Bitcoin investors becoming millionaires. However, it's important to remember that with high potential returns come high risks. Stocks, while they may not offer the same sky-high potential returns, have a long history of steady, reliable growth. Plus, many stocks pay dividends, which is a portion of the company's profits paid out to shareholders. Cryptocurrencies don't offer dividends. Lastly, let's look at accessibility. Cryptocurrencies can be bought and sold 24/7, which is not the case with most stock markets. This means you can react to market changes at any time. However, this also means the value of your investment can change drastically while you're sleeping. Understanding these differences can help you make informed investment decisions. So, whether you're leaning towards the steadiness of stocks or the high-risk, high-reward world of cryptocurrencies, always remember to do your own research and never invest more than you can afford to lose. Now let's delve into the sentiment surrounding stocks and cryptocurrencies. The world of investing is a vast and varied landscape with different asset classes evoking different sentiments among investors. When it comes to stocks, they are generally seen as a safer investment. They've been around for centuries and their performance is often tied to the success of tangible, real-world businesses. This tangibility, this connection to the physical world, provides a level of comfort and security to investors. It's like holding a piece of a company in your hand, a share in their success and their future. Cryptocurrencies, on the other hand, are the new kids on the block. They're digital, intangible, and their value often seems to be driven more by speculation and sentiment than by traditional financial metrics. This makes them a much more volatile investment. But with higher risk comes the potential for higher returns, and that's exactly what attracts many investors to cryptocurrencies. The possibility of making a fortune overnight can be tantalizing, but it's also a double-edged sword, as the value of these digital assets can plummet just as quickly. The sentiment surrounding cryptocurrencies is often polarized. Some view them as the future of finance, a digital revolution that will upend traditional banking systems and democratize wealth. Others see them as a risky gamble, a digital Wild West fraught with scams and market manipulation. It's worth noting that while stocks and cryptocurrencies can both be part of a balanced investment portfolio, their risks and rewards are very different. Stocks offer steady, long-term growth and dividends, while cryptocurrencies offer the potential for rapid wealth generation, but with a much higher risk of loss. In conclusion, the sentiment surrounding stocks and cryptocurrencies reflects the contrasting nature of these two asset classes. One is seen as steady and reliable, while the other is seen as volatile and speculative. But in the end, they both have their place in the world of investing. As with any investment, it's crucial to understand the sentiment and the risks involved. So, there you have it. A comparison between stocks and cryptocurrencies. We've journeyed through the basic concepts, highlighted the similarities, and delved into the differences. Stocks, as we've seen, are a time-honored method of investment offering ownership in a company, while cryptocurrencies offer a digital frontier, teetering on the edge of technology and finance. Both have their merits, and both have their risks. Stocks are subject to market forces, corporate performance, and wider economic trends. Cryptocurrencies, on the other hand, are susceptible to extreme volatility, regulatory pressures, and technological innovation. Yet they all offer unprecedented opportunities for growth and innovation. The choice between investing in stocks or currencies, or perhaps a blend, ultimately depends on your personal risks, investment goals, and belief in the future of technology. Remember, the world of investment is not one size fits all. It's a dynamic landscape, constantly evolving and changing. And while we've provided you with a broad overview, we cannot stress enough the importance of doing your own research before making any investment decisions. The key to successful investing is knowledge, and that comes from reading, learning, and staying informed. Thank you for watching. Be sure to like, comment, and subscribe, and hit the bell notification so you'll get updates anytime we upload a new video.